Welcome to etvFutures.com. Today is Friday, January 4th. I'm Caitlin Sisney with your Commodities Open. Crude in New York fell after a government report showed hiring in the U.S. cooled more than forecast last month, stoking concern fuel demand will drop as economic growth slows. Crude is trading at $97.76 per barrel on the NYMEX. The Energy Information Administration said in its weekly report that natural gas inventories fell by 87 billion cubic feet to about 2.92 trillion cubic feet for the week ending December 28th. Natural gas is trading at $7.55 per million British thermal units. Gold fell on speculation a rally to the highest price since 1980 was overdone. Gold is trading at $861 per ounce. Silver is down at $15.35 an ounce. Today we're joined by John Kilduff from Man Financial. John, can you give us your outlook for the commodities market as we head into the weekend?
Caitlin, we are seeing significant pressure being brought upon the energy complex today in response to, I think, some exhaustion over the recent run-up and eclipsing of the $100 per barrel mark for front-month crude oil, as well as some of the recent records that were set for the refined products. Also earlier today, we saw a very bearish natural gas inventory data point at 87 BCF withdrawal from storage. Most analysts, including ourselves, were looking for a number north of 100, upwards of 110. So that's bringing pressure to bear on natural gas, as is the weather forecast in the short term, which is having a significant warming trend move into the northeast over the course of next week. Also, the jobs picture this morning continues to show a deteriorating economic condition that is also bearish for energy, and certainly not making the case for $100 oil sustainable, at least at this moment. We're seeing the spillover on the economic weakness into the other commodities as well. Most especially gold, which had spectacularly run up and set new records along with the crude oil, down a full percent today, and some of the ags are following along. We're also noticing a gap lower in orange juice after the Florida orange juice crop dodged a bullet earlier in the week on the frost that was potentially headed their way, and which would have resulted in a big reduction in the carton production in the region. Corn down big as well. Again, not able to fight the tide of the economic data. So overall, we're seeing negativity spilling over from the equity markets, borne out from this week's jobs number, and also just profit taking, especially, again, circling back to the energy sector in crude and refined products across the board.
Thanks, John. That's all for your Commodities Open. I'm Caitlin Sisney. Join us again later today for the Commodities Recap right here on etvFutures.com.